currency, better than your currency. Splurging millions, buying houses like Monopoly. Fucking 9 to 5, man, the money is a joke to me. Buying cryptocurrency, my money in the privacy. I make it rain dollars, they watch me disappear. I'm so fly, man, I'ma need some...
Hey guys and girls, welcome to this week's episode of the B.Invested Birchy podcast. I'm your host Nathan Birch, and this is a show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. Reality for some is not so fucking sunny, hey, right? Reality for some is really good. And today I want to talk about the reality of getting started, right? I think this is more like a rookie question, right? And it just reminded me because one of my team sent me a message saying someone's ready to do their second deal, and this person was very cautious, right? This person's very cautious. And I remember when I spoke to this person for the first time, I was talking about, I asked them their goals, right? I said, what are your goals? And they said, I want to retire, I want to replace my income. And it's like, okay, I want to replace my income. How much is that? Let's call it 100 grand, right? And we reverse engineered, and I said, you're going to need like 10 properties to do that. It's like, I've got the servicing, I've got a deposit of 150 grand, I've got the capacity to be able to buy up to $1 million. Why would I go and buy 5 properties at 200,000 when I could buy one at $1 million? And I was like, it's a very, very good question, right? And I think that's a trap that people have, that they get themselves caught into, because they think that buying one big fish is better than having all the multiple little ones. And this would probably be a good podcast for me to put on the whiteboard, our new digital whiteboard, which we'll get in future episodes, right? But because I could draw it out very, very attractively. But just follow me and work with me on this, right? So if you've got $1 million, it would make sense, right? You can spend $1 million on a house, on a big house, one big asset, less headaches, whatever the case may be. But you need to think about, how is this going to help me in the longer term and the bigger picture? So I look back, right, at, let's just use Southport, for example, right? I can use Mount Druitt, 2770 back in the day. I can use Southport today. Southport's one that's being cooked as we speak, right? I used to buy in the Gold Coast, probably 50 properties a month for myself and my clients. And I used to pick up stuff for 150 grand to about 250 grand. I was buying a 3-bedroom townhouse of 250, 260. I was buying 1-bedroom units for 150. The cheapest property I ever bought on the Gold Coast was a unit in the Hope Island. I bought that for $32,500. I bought 3 of them there. And looking at the properties, we're picking up stuff. The average, I'd say, would be 200 grand for a 2-bedroom unit in Southport or in Surfers Paradise, Chevron Island, whatever, and they were renting for $320, $350 per week. And then if we look at houses, you could pick up a house in Southport for like 500 grand, and it'd rent for $500 a week, $600 a week. The reality is like $450, because I bought like an acre of them. I bought a street full of houses like that, and that's why it's in my mind. So I look back now, we fast forward, 5 years, right? Those units that were 200 grand are now selling for 600 grand in Surfers, Mermaid Waters, Mermaid Beach, Tugun, all these locations around there, right? So stuff I was buying for 200, it was renting for 330, 350 a week. Let's call it 300 a week. The rent's now 600 on them, and the 200 grand property's gone to 600 grand, right? The house at 500 grand, I actually thought some of my house I picked up cheaper, 500 grand are like $900 to $1 million for some of them, right? So the house has doubled, let's call it doubled, right? It's gone from 500 to $1 million, but the units have gone from 200 to 600. And, here I am just a miserable fuck, because I'm like, I wish I bought more units instead of houses, right? But the perception is that the units are worse than the house, right? The house doesn't appreciate like the unit. But people don't look at it from the reason why properties do go up in value. They're just looking at it from, the house must be a better option. And if I worked with the mindset that house is a better option, I would have only houses, and I'd have all acreages on my properties, right? But when you're buying a house, your cash flow is shit. Right? People go, well, when you buy a unit, you've got to pay strata fees, right? We'll get into that in a moment. But reality of it is, let's say I had $1 million to spend. I could have bought 5 units. I could have bought a Mermaid Waters, a Tugun, a Nerang, and Southport and Chevron Island, right? They're just 5 suburbs along the Gold Coast. And they'd all be worth 500-600 grand a piece right now. And the rent would have gone up from $300 a week to $600 a week. They're probably $330 to $650, $700, whatever, right? So those properties would all be positive cash flow if they were neutral cash flow, buying them for $200, renting for $330 a week. At $660 a week, that means that they'd be positive $330 a week. And if I had 5 of them, well, then I'd be able to get an income of $1,600, $1,700 a week now. My investors that did that going back 5-10 years ago, you know who you are because you're fucking gangsters, right? Someone's laughing in the background. I didn't know what to call you, right? You made the decisions, right? The Gold Coast was a shit market. People talked against it, whatever. But you're in a position now where you're retiring. You're telling your boss where to go, etc. But at the same time, you could have bought 2 houses and you would have felt like, I've got 2 houses, right? I don't have your little peasant units that you've had to buy. I've got 2 houses, right? I've got $1 million. Reality is that those properties at 500 grand a piece that are now worth $1 million, the rent's $700 a week, $800 a week, because there's a cap where the average bear can go on, better than the average bear, right? But there's only a cap of what people can afford to spend for rent, right, on the things too. But the prices have only doubled. So your $1 million of units has tripled to $3 million worth of units, and your house of $1 million has doubled to $2 million. Those properties have gone from negative cash flow $200 a week to neutral cash flow today. Cool, right? Reality is that, yes, you've only got 2 properties to worry about, but if the houses screw up, which I've got a situation at the moment, replace the gutters, replace the roof, replace this, replace that, replace the driveway, replace the fence. If you're in a unit, it's like, well, that's all covered from the strata, right? Everyone just chips in and pays for it. The building insurance is covered under the strata fee. The building insurance when you buy a house is covered under that. So I don't want to get into the house versus unit thing. But my point being is that there's 2 different scenarios. One would assume the houses would be better, but it's not always the case, right? If we look at the ability of your servicing, right? If someone comes to the table, and let's just use an example here, right? Someone's on 100 grand income, they've got 100 grand savings, and they can borrow 500 grand worth of property, right? Let's say they buy 500 grand worth of property. They can buy one house, right? That rents for $500 a week. So that one house that rents for $500 a week, you're getting $500 a week times 52 weeks would be $26,000 a year. $26,000 a year plus your 100 grand income, you're at 126 grand a year. Congratulations, right? You've got a 500 grand, let's just say you've got a 500 grand loan for the fun of it. Your debt is 500 grand. Your asset position is 500 grand. You go and take that same money and you go and buy, say, 3 units, right? You buy 3 units at 150, 200 grand a piece. The 3 units are renting out for $300 a week, right? So now you've got $900 per week, right? 3 units, $300 a week, $900 a week, 52 weeks, about 47,000 and a half, right? So let's call it 50K just for the fun of it. 25K versus 50K. Your income now is no longer 100 grand. You're now on 150 grand. So when you take your position back to the bank looks at your position and goes, this person has 500 grand worth of debt, this person has 500 grand worth of debt. This person has 25 grand income and 100 grand income, so 125 grand income. This person has 150 grand income. The bank will come back to the person with 150 grand income and say, yes, you can go and buy another 300 grand worth of property. Okay, great, I'll go buy property. Where am I getting my deposit from? I've got 3 properties I can pull equity from. This one doesn't have an equity, that one has 50 grand equity, that one has 20 grand equity, right? Let's look at the other person. They go back to the bank goes, well, almost maxed out. I can get you 100 grand. What the fuck I'm going to spend 100 grand? Let's say you take it, right? The reality is that the servicing has gone up because the income streams have gone up. They say, okay, we need to pay a deposit. You say, I've got my house there, come and pull some equity out of it. The bank goes and values it, and the bank says, well, you don't have any equity in it, right? You don't have a second or a third option, right? When you've got those broken down into 3, you've now got 3 hooks, those 3 units, or those 3 different properties. They don't have to be units. They could be a house in Cairns, a house in Brisbane, a house in Perth. I'm just making it up, right? They could be 3 different houses, right? Let's call them houses and houses, right? Before people start saying what's better, units or houses, right? Have the lot, get them all, get houses, units, blocks of units, motels, shopping centres, acreage, fucking get them all, right? But the reality of it is that if you're going fishing, right, you throw the hook out, you got to try to catch a fucking shark, right? Trying to catch a shark, you got fucking a fishing line like a whippersnipper, right? You got really thick line, you're throwing this fucking hook out, you've got a whole brim on there, right? You throw your rod out. The other person sitting beside you goes, I'm going to catch some snapper, right, whatever. They get 3 little fishing rods, right? They throw those rods down the ocean, bloop, bloop, bloop. They've got a little shitty prawn on it, right? A prawn in the ocean, fucking nibble here. Oh, the fish ran away, took my bait, okay, fuck off that rod. You've got 2 more rods. You've got this one, oh, fucking shark got on here, right? Oh shit, I've got lost the fish, right? I've got, the hook's gone, the sinker's gone, the line's gone, everything's gone, right? Better pack up, go home for the day, right? You've got nothing left. Still got 2 hooks here. Oh, got a fish, right? I've got another fish. You've pulled 2 reels in, right? You got the hook in the ocean. If you have 3 properties instead of 1 property, you now have 3 hooks in the ocean. 3 hooks to catch equity, 3 hooks to catch cash flow, 3 hooks to catch growth. So the larger the asset base, reality is this game of buying assets and building wealth, it's just a game, right? It's just a game. Money is made up. The whole system, your property didn't get any better because it doubled in value. The whole system, they just printed more money. People could afford to spend more money because they could get more debt from the bank. The bank was going to lend to them better terms, whatever the case would be, and it caused a boom to occur. That is how properties go up in the marketplace. And when you look at it, if the market was to double tomorrow, what would you want? Let's say that the market, we're here in 2024, we're getting started, and the market is going to double. Let's just assume, right? It's going to double this year, next 5 years, whatever, right? If the market was to double today, this is the day it's going to double, would you want to have $1 million worth of property doubling to 2 million? Or would you want 5 million doubling to 10 million? It's pretty fucking simple, right? Reality is that you need to keep the bank happy, right? When you're buying an asset, people are just thinking about, I want the house, I want this. Of course, in my portfolio, I want 1,000 fucking houses, I want 1,000 blocks of units, 1,000 whatever, right? But I need to think, what does the bank need from me? The bank needs cash flow, the bank needs deposit, the bank needs equity. So those properties, your income can get you a certain point. You could be on $500,000 a year, right? I've seen doctors on $500,000 a year with a worse financial position than someone on 70 grand a year, right? It comes down to the decisions they make, the assets they buy, all those things factoring in to the bigger picture, right? The question I ask is, what is your end goal? You buy 1 property, right, for $1 million, and then what? Is 1 property for $1 million going to retire you? Let's say you're going to say, this could be a different scenario, right? We're not going to get into houses versus units versus blocks of units. Just say we buy a block of units, right? What is better than if you had a unit or a house or a block of units? Someone would say, I want the whole block of units, right? Well, the banks don't see it that way either. They see a block of units as being risky, right? You have a block of 6 units at 200 grand a piece, that's $1.2 million worth of value. You have the whole block of 6 units without a strata on it. You think you're saving some strata, I'm going to save some money. Next minute you're paying for the fucking gutters to be replaced yourself, paying for the fence to be replaced yourself, the roofs to be replaced yourself. You're paying your own insurance fees, and you're like, shit, I really should have took the strata fee because it seems a lot cheaper then, right? But anyway, leave that aside. You get the block of 6 units, which is all on one title, or 6 individual properties spread out across 6 different locations, right? If you fell on hard times and you needed to sell something, right, you've got 6 bullets in your gun, right? You go, boom, I've got 5 properties now, but I've solved my problem, blah, blah, blah. You have that 1 block of 6 properties, it ain't as liquid. It ain't as liquid, folks, let me tell you that. Right? I've got lots of blocks of units, right? And they ain't liquid. The bank will give you a loan, instead of giving you an 80% loan, they'll give you a 60% loan. They want double the amount of deposit. So if you've got 400 grand, let's call it 500 grand to spend as deposits, you can spend 500 grand on 20% deposit plus closing costs, so you could buy $2 million worth of property, individual properties, or you could spend that same 500 grand as a 40% deposit on $1 million property, right? You've only got $1 million property going up to $2 million instead of $2 million doubling to $4 million. You seeing the picture, right? So when you're acquiring the assets, there's different cycles you need to go through, and it's different checkpoints. Who's played fucking Daytona USA, Sega Rally, right? Sega Rally Championship. I sound like I'm fucking off my head, right? As you're playing Sega Rally or whatever it is, you remember playing those games? I haven't played a game for like 20 years or something, right? Maybe I should, right? You're playing it, I remember, checkpoint, right? It's like, do, and your time's going to run out. You have to get through the checkpoint and you get some more time, right? The banks have checkpoints there for you, right? They have points. It's like, you need to get through. We need to get the deposit. Oh, yes, I can get another deal now, right? But if you're, doing it wrong, the checkpoint, you won't make it to the next checkpoint, right? And as an investor, you need to look at it from the bigger aspect of, okay, what am I going to try and achieve? I've always, as I'm building my portfolio, and my suggestion to everybody out there, be guided by the banks, right? Be guided by the banks. The aim of the game, get the largest asset base. The market doubles. The market isn't going to discriminate whether it's a house, a unit, a duplex, a block of units, whatever. They all relatively go up over time. But you want to have the largest asset base. You want to have liquidity in your portfolio, right? You have one property for $2 million or 10 properties at 200 grand a piece, right? Something turns bad, we end up in a situation, you can still sell one, sell two, sell three, you still got 8, 9, 10, 7, 6, 5 in your portfolio. You have one, that's all you sell, that's all you've got. The bank says no equity, no growth. You've got 10 properties, 2 in Perth, 2 in Sydney, 2 in Brisbane, 2 in wherever, right? Adelaide, wherever. 2 in Melbourne, right? Even Melbourne, right? The bank says no equity. It's like, okay, well, we won't use that one. What about this one? Right? Bank says no equity. What about this one? Oh, yeah, you've got 100 grand with equity. Great. Bank says you no equity on there. It's like, oh, well, got to go home, fucking, whatever, right? You're going home empty-handed, right? So that's another aspect of it. And I think the most final aspect of it is just the liquidity. I've said it before with the blocks of units. Like, there's one more thing that I'm thinking of. In a market, right, let's say that I'm just going to go back to my example of 10 units or whatever. A unit rent might go up by $80 per week on your 200 grand, let's say, not call them a unit, let's call them a house, right? 200 grand property, you've got 5 of them, the rent could go up by $100 per week on them. On the big one, it might go up by $200 a week, right? It may not, it may go down, it may go sideways, right? But you're spreading that risk, you're spreading that leverage, you're spreading everything. If you have 5 properties going up by $100 a week, that's $500 a week. You've got one house going up by $200 a week, well then it's $200 a week, right? You're still 60% better off by spreading across that portfolio. I've got big assets. I've got big, that sounds really bad, right? I've got big assets. I've got little properties, I've got big properties, I've got all different types of properties, right? I was talking to a mate the other week, we're at the gym, and he asked me, would you change things in your portfolio? I've got acreages and big land banks and stuff like that, and they've gone up, right? They have gone up quite considerably. Stuff for like $1 million's gone up to 4 million, 5 million, whatever. But they've cost me like 50 grand a year negative and stuff like that. Land tax is a killer on them and stuff like that. I looked at him and I said, I actually would have been better off just holding the buy and hold stuff that I started off with instead of buying some of these bigger, chunkier assets. I could have added, instead of having one of those properties, 20 other little ones, right? And I think overall, my portfolio, it doesn't matter, it's blended, right? It's blended across all different markets, different segments, different risk profiles, different things like that. But I do think about it, I think, shit, if I had just stuck to the original, buying the 200 grand properties, the foundation properties, I still buy them. But I did go out on some tangents and I went, fuck, I'm going to have 100,000 square metres here. I've got an acre of land in a CBD there. And I could have made wiser decisions at the time. That probably takes me to one of my goals for this year. I know start of 2024 talking about goals and stuff like that. One of my goals is to buy 100 foundation properties this year. 100 properties this year as one of my goals. There's deals still out there. The market's still, very possible to do these things. I don't know if I'm going to get 100. I might get 10, right? I'm going to push for 100 properties this year. That's one of my goals. I'm throwing it out there just because people say, oh, how's your 100 properties going? They hold me accountable to it. I'll have to push myself. I'll have to find a way to make it happen. I'll have to push myself, right? So it's all about, nowadays when I do stuff, I throw it out there to the universe. And when I say things and verbalise them, and it's manifesting of it, and it becomes a commitment to myself. So on that note, guys, I'll leave it at that. What's better, one big house, one smaller house, or 5 smaller houses? You make the call. It's your decisions at the end of the day. All I'm guided by is the bank, right? As an investor. There's been many years since I haven't used a bank. I'm trying to start using some banks again. It'd be nice. I've got shitloads of equity. I've got you wouldn't even believe how much equity is there because I haven't touched it, right? And it's a waste. But we'll see how we go this year. So guys and girls, the camera just died. I'm going to keep filming without the video on. I've still got the audio going through. I'm always guided by what the bank wants from me, right? It's not about what I want out of the deal. It's what the bank needs from me to be able to help me for the next stage. It's a finance game. It's a banker's game. It's not, let's buy a core property or anything like that. It's a matter of keeping the banks happy so they'll keep providing you the money to be able to expand your position. The end goal is to have a nice, big, fat asset position where you can get more assets in. If you've got 10 mil is better than 5 mil. 5 mil is better than 2 mil. You need the biggest asset base to take through the market cycles. You need to spread your risk. You need to have liquidity to your portfolio. If you needed to dispose of something, you don't want it all tied into one asset. Plus the ability to scale. The smaller ones go up at a greater rate. I've got properties in high blue chip locations, some of the most expensive areas like, say, Vaucluse, for example. I've seen properties in Vaucluse double and a half over 15 years. I've seen properties in mining towns that have gone up 6 times in a year. I've seen properties in the Gold Coast go up 3 times in 4 years. So, be open, be mindful, think about the overall strategy, think about what you need in order to get to where you want to be. If you need help working out your finance strategy, whether you need help building an investment strategy, whether you need help finding the deals that are cheap, need a mentor, whatever, reach out to us. 1300 367 925. Hit us up, admin@B.Invested.com.au. Give us a share, give us a like, share us with your friends and family, and make sure you listen to us every Thursday. Apple Play, Google Play, Spotify, and YouTube. Have a great day. Thanks for listening. Bye for now.
Like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it. The dollar back to die, soon to be hyperinflated. This my 2 cents, don't care if you save it. Join be decentralized and you will see you been lied to the whole time, and it's the irony, cause they do the exact opposite. You become a slave to the system, enough your money, all they do is profit. There's no conspiracy theory, you better hear me. Crypto will set you free before the system does. I don't care if you do or you don't, but what I'm saying is the truth to the reason you choke. I never been a failure, excuse my behavior. Keep talking, haters doing me a favor. And you're telling lies, I know what they been telling you. I'm the opposite, like Donald Trump of Australia. It's amazing, here for the taking. My time is never wasted, just getting wasted. These girls say I'm really breathtaking.